Welcome to Stock Market Investing with the ARMR Report. I'm Brett Rosenthal. This is an in-game update. We do in-game updates and morning meetings every day. It's exclusive video, as you can see here, for ARMR Report Insiders. This is one of those videos, and I wanted to share it with all of you at YouTube because there's some disturbing action going on in the market, and I want to share with you how the ARMR Report is going to address it. Now, don't forget, ARMR stands for Algorithmic Risk Management Research. So I'm always coming at my decisions from an angle of risk management and then capturing upside second, okay? And so I want to share these thoughts with you because I think they're important on a Monday afternoon. I'm going to be sharing information that I use to invest in my own personal portfolio. The ARMR portfolios, as you can see here as an ARMR insider, you get access to the portfolios, okay? When we drill down in there, what you're going to end up seeing, ARMR insiders, you already know this, so just bear with me. But you're going to see our model portfolios. You're going to see what we're doing at the end of every day. We update that every day. Okay, our index-only portfolio, and then a spreadsheet with all of the entry points, the dates we buy them, the prices we buy them, the stop losses. I update those stops as I go, the targets we're looking for swing trades. So this information's what I use to run my own capital. That's what you're looking at. The ARMR index only, the ARMR swing, the ARMR invest portfolio is my capital. So I'm not telling you what to do, right? This conversation is to stimulate thought, to make sure you're thinking about all the angles, and then execute at the risk tolerance you're comfortable with, going after the goals you want, okay? So having said all that, let's drill down into the market right now and what's concerning me. That is a chart pattern. And let's get rid of these colors here for a minute. This is a chart pattern of the ARK Innovator funds, okay? We have to get rid of these colors because that uptrend is dead now, okay? And we have a serious breakdown going on inside of the Innovator funds. Something is not right. Something's not right, okay? We cannot ignore it any longer. For a while in there, the ARK Innovator type of assets were making a base at the 200-day moving average. Okay, that's what this green line is here. As long as they're making a base in here, we'll say, okay, they could come off the highs. They could take a break. If they begin to plummet to new lows, eventually that's going to drag the rest of the market lower. It always has. Okay, it always has. And so now we look at, I'm just going to throw up QLD, which is the Nasdaq 100. All right, this is twice the performance of the NA of the triple Qs. Okay, this is now imploding and about to take out the lows of a few days ago. If we close below those lows, and this is part of the ARMR report I'm going to share with you, it's going to shift capital out of the market for us. Okay, in all likelihood, the Nasdaq 100 will go to cash in our index-only portfolio, which is rare. And it means a lot. The S&P and the Nasdaq 100 are the centerpieces of that portfolio. Our algorithms, which we have 8 written for the different indexes we follow, the 2 most accurate algorithms are on the Nasdaq 100 and the S&P. Actually, the S&P is the most accurate, okay? So it drives all of our risk decision and has a higher weighting. Now, it hasn't happened yet. We could have a recovery in the afternoon, and this whole conversation could be put off for a couple days. But I wanted to have it with you so you're thinking about what's going on today and how to respond to it, okay? We're getting breakdowns in very important stocks, right? Tesla imploding, okay? And I could go through an absolute list. How about TTD? Absolute implosion for Trade Desk. Don't fight it. Don't argue with it. Don't try to come up with reasons for it. The chart pattern is telling you something's very wrong with the stock, okay? MGNI is the same thing. Now, these stocks should be going a lot higher based on what's happening in the ad business, right? And instead, they're totally imploding. You guys remember Viacom? Okay. This absolute collapse has been on my mind since it occurred. A hedge fund blew up. Hedge funds that blow up are generally like cockroaches. There's never just one of them. So you get the first shot across the bow. Nobody panics. Everyone says it's contained. And then price action tells you if it's actually contained. Okay? And the more aggressive the selling gets, the closer you are to the next announcement of some blow up. That's why there's a selling going on. We won't know it until after it's done. Is this the end of the world for the bull market? No, I'm not saying that. You could get blow ups, and in a world of a mechanical bull market where the Fed supports everything, it'll rip markets lower. Then there'll be some support action. When you think the market should implode, it'll start going higher again. So this is not a call to get wildly bearish. It's a call to remind you to be cautious at this time in the market. Something's not right, and we're getting destruction in quality innovator names. Then we can also look at big cap names that in our portfolio, we thought were going to go higher, right? We were long shares of Amazon. We sold them this morning as it breaks below the 50. Okay. Apple hasn't quite taken out the low of this down day right here last May 4th, but it's close. It closes down here. This thing is in trouble. How about Facebook? Had that blowout earnings number. Remember that? Stock gapped up, blew out. Now it's reversed and it's imploding. Okay. I haven't looked at Twitter, but where's that trading? Oh, wow. It's getting crushed. And yet I remember a lot of people last week all excited on Twitter telling me how Cathie Wood's buying millions of shares of Twitter. Okay. That is not a good thing. Right? That ARK Innovator portfolio is imploding. We don't want to go follow that ship down right now. So we look at the ARMR portfolios. We're having an unbelievable alpha day as the market's getting destroyed. I don't know where we're going to end up. Our invest portfolio is up on the day. Our swing portfolio is down a bit, but small fractions, which is incredible with the Nasdaq down 2.5, small caps down 2, momentum down 2.5. ARK Innovator Funds down 5%. My guess is ARMR portfolios will be down more by the end of the day, okay, if there's no recovery in this market. So let's go look at the S&P. Because eventually what happens is everything gets dragged down when things are imploding. And we'll find out why later. Usually it's a cockroach thing. If you guys read about what happened at the Viacom Discovery implosion, there was just classic manipulation of stocks that led to a meteoric rise in those assets. And like every Ponzi scheme, it eventually ends and you can't keep it going and it implodes. This is what happened. You want to say that's too harsh? All right, you can say whatever you want. But I'm telling you, they were buying the stock, buying way out of the money calls to create the fake gamma squeeze that ripped the stocks higher. And now what I think we're discovering, because we heard last week that Cathie Wood's seed money came from the guy whose hedge fund just blew up, okay? Guilty by association. Some of these positions that look like Viacom, that had straight up moves, that experienced massive out of the money call buying to create the gamma squeeze, that fake manipulative action is unraveling. So where do you go with money? Couple of things to do in a market like this. First of all, number one, you get rid of all margin. No margin in a portfolio. Okay? Number two, you got to start lowering the beta in the portfolio. This is not a call to go to 100% cash because we're not getting risk off across the board yet. I don't know how this is going to play out. The whole thing could be over by the end of the day for all I know, and the market could rip higher into Friday. I've seen it happen before. But what we want to then do is we want to focus our capital on the areas of the market that are going higher, which are lower beta names. And we're doing this at the ARMR report. And that's why we're having a day where we're up in our investing portfolio and almost flat in the swing portfolio. All right. We own Coca-Cola. We just added shares of JP Morgan. We own shares of IBM. Okay. We own shares of McDonald's. Right. We own shares of Williams, the pipeline stocks. Okay. We own shares of, I'll give you an example. How about CVS? CVS is skyrocketing for us in the midst of a market implosion. So what does this really tell you? I submit to you that the market is not imploding at the moment because the Fed's out there making ridiculous asset purchases and keeping interest rates low. So what's happening is market is rotating aggressively into stocks that don't have any gamma manipulation going on. Nobody's manipulating the gamma on CVS. No one's manipulating the gamma on, what we just recently bought shares of how about Chevron, right? How about AT&T? We own shares of AT&T. You don't have to manipulate gamma there. You just pick up a fat dividend yield and the stock crawls up. That's the year we're in. So I submit to you, stocks where you can have gamma manipulation are getting destroyed. Money's not leaving the market at the moment because no one's raising rates and everyone keeps adding liquidity. So it's rotating into these types of names, which is really, quite frankly, a really beautiful sigh of relief and pretty relaxing for a portfolio manager. I can go buy shares of AT&T. I haven't even looked at it since I bought it. I mean, seriously, I bought it at the end of March, right off the lows. Now the stock's just going up. It's paid me a dividend. I don't even have to think about it. Okay. What if I was long shares of Village Farms? I'd have to be thinking about that. What a destruction that is. And so that gets me to my next point. And I hate to tell you this. I hate to say it. Okay. But the last thing you want to do in a market meltdown of speculative ideas is own stocks that trade on the Canadian Stock Exchange. Please be careful. Please be careful. Okay. This is about risk management first. We'll capture upside second. Okay. We're going to step out of those positions that are high risk, high reward, high beta names. And we're going to focus, on names like, I don't know, GE in a tight pennant formation. About General Motors up here at the 50-day? Maybe, I don't know. I like to find names where they've beaten the stocks up on earnings and they don't go any lower. Maybe Ford does that. How about Pfizer? I'm loving Pfizer. I mean, think about Pfizer. They just can't. Joe Biden just said he's going to steal the intellectual property from Pfizer and Moderna, and the stock's not going down. There's only one direction left for it to go. And notice the beta on these names. They're all lower beta names. Now, if the selling gets bad enough in these innovator stocks, it's going to take down everything. And we're going to end up getting stopped out of everything. So maybe the fourth thing that we're going to be doing now from today going forward until such time as these other stocks stop imploding, okay, is we're going to put a moratorium on buying anything new. Start building up a cash position. What's wrong with that? So what if you're 25% cash, 75% long, and you own AT&T and Chevron and CVS and you're collecting dividends and taking the summer off, relaxing? I mean, not good for my business, right? I want you to watch me. I want you to watch me. So, we could talk about all kinds of things. I want to say to go ahead and subscribe to the ARMR Report. I'd love that. Subscribe to this YouTube channel, right? Hit that like button. That really helps me out. But at the end of the day, I started this process to help me order my own thoughts and share with you 30 plus years of experience managing money. I didn't start this process to carnival bark at you and make you subscribe. I don't care what you do. I'm just trying to share with you what I go through every day. Hopefully it's as raw and honest as it can be. It's not about me throwing money at the screen, telling you how much money you can make if you trade some little teeny small cap stock. That's a waste of time and eventually a waste of your money. Because when the bids get pulled from those ideas, they're done. And the paper profit you thought you had is gone. And so I started the ARMR report to manage risk. It's what separates a professional money manager from everybody else. I should say a successful professional money manager from everybody else. And so at times like this, when you see destruction in what were quality love names last year, you've got to start doing things to protect capital. Okay? So ARMR report is reducing beta, raising stops and exiting positions quickly, raising cash, not adding any new positions. Those are the 4 thoughts for you today. And I'll take any questions you got up until, I don't know, maybe 5-10 minutes. Anybody got a question for me? I'll answer it if I can. Yeah. So Mark is just mentioning things like, right. I mean, Fastly, we avoided that unbelievable collapse. You know, I know a lot of people were on me for missing DraftKings. And I keep saying this, no offense to anybody. I don't mean to single out anybody, but over and over again, I'm beat up because I missed DraftKings. And I haven't missed anything other than, of course, a swing trade. I mean, if you bought DraftKings here and you sold it on the swing, then you killed it. Well done. You outperformed me. But if you bought DraftKings here and you still own DraftKings, you've done nothing with your capital. And what I'm afraid of now is you're a quote long-term holder. You don't know what to do with this position, so you just stay with it, and it implodes on you. Be careful. Raise your stops. Be defensive. Same thing about Penn. Right, the 200-day now, right? Tesla. You know, it better hold the uptrend, and it may do it, guys. Hey, Mark, it might do it, and I'll be happy to add new names by the end of this week if the market stops imploding. Okay? So just remember that. What we try to do at the ARMR report is read and to react to what we're given. Ultra short. Yeah, you could do that. You could always do that. Is it any surprise? Is it any surprise that part of the market triggered this collapse? It happens every time Joe Biden opens his mouth. And the reason for that, and look, this is not about liberals or conservatives or anything. It's just about sound economic policy and terrible economic policy. And Wall Street sniffs it out immediately, right? When you start attacking intellectual property, when you start forcing people to accept jobs, I mean, everything that's coming out of the mouth of government right now is the long and short of it is terrible for the stock market. Okay, it's just terrible. And then I hear these unbelievable hypocrites saying that, oh, it's so nasty that capitalism only cares about making money. And that's just so myopic. I don't even know how to deal with that. Okay. A strong economic environment helps the masses. Just look through history. It's really not a debate. If you stifle growth and you force people to do things, you get breadlines. You get people online waiting for shoes for like 10 hours. We've already seen these things occur. You think I'm being overly dramatic? Oh, of course I am. I don't think the government of the United States is going to go that direction, but I'm just saying to you, when you make wildly anti-growth comments, boy, the market takes notice. Said, holy smokes. I mean, we can't hold growth stocks. And think of that, the destruction that's going on in 401k plans, right? Of all the people who are working. You know, there's many different ways to look at it. Anyway, are you a buyer of Coinbase? Coinbase. I'm not a buyer of Coinbase yet. I mean, at some point I might be, but I use algorithms for my entry points. The ARMR Investing Way is a 3-stage process. Build the whiteboard, use algorithms, use stop losses. Algos don't work, at least the ones I've written, don't work unless I have enough data that I can be confident in, and that usually takes 6 months. And what you'll notice on most new issues is they take 6 months to consolidate, sometimes 9 months, before the real move begins. So when it comes to day trading, you could day trade anything. But if I'm going to invest in Coinbase, usually what happens is you have to get past the lockup agreement, which is usually 6 months out. So when a company goes public, there's a bunch of insiders who want to sell. They can't sell. They're locked up until 6 months later. Sometimes it's 4, sometimes whatever the month, whatever the time frame is. And then they dump, and that usually sets the low in a good company. Okay, not all the time. Obviously, some IPOs come out, they go straight up. But I'm just saying that high profile names like this usually take time to build a base. And so I won't be trading those. I won't be investing in Coinbase at all right now. Do I think there's gamma manipulation in Amazon and Apple? I don't think so, Brian. That's not really what I'm talking about. I think this is just a genuine breakdown because there's collapse going on everywhere. And so you don't know, a big hedge fund could own Amazon and Apple, and then a bunch of these names they're gamma manipulating. And when they all start to blow up, they need to raise cash and they sell whatever's in the portfolio. And that's why absolute destruction in past leadership can bleed into the rest of the market. So I wouldn't say that there's, for me to call it absolute, gamma manipulation, I'm looking at stuff like this, right? Okay, just an absolute walking up, just complete ridiculous walk up, and then collapse, right? This walk up wasn't real, and this collapse, is the unwind of that. Okay, as we read more about the story, this walk up was manipulation. And truth be told, I don't know, so Amazon doesn't have that kind of chart pattern. I don't think there's any gamma manipulation here. It's just the markets are starting to unravel because of a collapse in a certain sector. And then everything starts to get tainted. And no matter how good your portfolio, the whole thing goes down. That's typically how it works. Now, there's no way I'm going to get out there and sell everything today. That's not what this call is. This call is just to say, hey, man, yellow flag is flying. Something's not right. Now, if it can right the ship, hey, turn around Tuesday. Whole market could be screaming higher tomorrow. Okay? And by the end of the week, we'll be making new highs. And that's great. And here's what we're going to focus on at the ARMR report if that's the case. Okay? Just as an example. Right? We're making a killing in CVS. Okay? We're making a killing there. So would it make sense to add some WBA? Probably. And this is a Dow stock, Walgreens, right? Cup and handle coming out above 55. Probably worth putting some capital to work. Hey, I got my eye on Rite Aid. I think it's the whole space is going up, and Rite Aid got destroyed on earnings, made a bottom right at the 200-day moving average. The risk reward looks great to me there. It's just right back into its base. There's just an example. Okay. Would I consider increasing my steel positions? I would. If I could finally get some, selling that brings U.S. steel back down into a base, makes it worthwhile, I could add to it. And Cleveland Cliffs. Those are my two favorite names in the steel space. Right. So if they come down and touch moving averages, maybe we try to buy them off the 50 again. They seem to touch it constantly. All right. So, ARMR Insiders, I'll see you guys at 3:30 in the Slack room to update what the portfolio looks like. There were some names I added this morning. Depending on how this market ends, I might take them out because I decide really I want to carry cash, and I just don't want any more risk in the portfolio at the moment until I see how this plays out. If the market holds up here, and which My guess is the market's going to hold up and move higher by the end of the week. That's my guess, because there's no systematic increase in rates, reduction of asset per, none of that's happening, which is what usually brings on a real collapse in the market. What's happening instead is vicious rotation. And then there could be a name that's in your portfolio that gets caught up in that for reasons that don't even make sense. And so I need to pump the brakes on everything when this type of action is happening and see where we are. Then we'll have some cash in the portfolio, and then we might add our favorite positions that are lower beta names that aren't touched in any way. Like, Google and Apple are in a bunch of technology funds. If the technology funds are being destroyed, people are just going to sell ETFs, fund managers. They have to sell everything in the portfolio to keep the percentages the same, right? So they just dump everything at once. And so it's best for us to put capital that doesn't even touch the TTDs of the world, that doesn't touch Pinterest, Twitter, Snap, any of those names. What ETFs don't have any involvement there? The financials, the retail stocks. I mean, these stocks, take a look at, I don't know if the stock is still up in the portfolio. Let's take a look. Look at Best Buy. Look at Best Buy breaking out. Holy smokes, what a breakout in Best Buy. So there are some great places to put money. Great places. All I'm saying today is take a minute to think about what you're doing. Raise your stops. Raise some cash. Don't be on margin. Now's the time to protect yourself when you see this type of action happening. And then, hey, if the whole thing stops going down, makes a new base, starts to go up, okay, put some capital to work. All right. I hope this was helpful today. I'll see you guys, as always, at 11:30 on Saturday. But every now and then, I like to share what we're doing in the ARMR Insider Slack room and on our live exclusive comments for ARMR Insiders. I wanted to share this one with you because I have a lot of passion about it.